Good morning, everybody. Here's the camera. Good morning. We'll get started in just a second. Here we go. All right. Yeah, we should be good to go. Perfect. Okay, well, you know the drill, and if you don't, good morning. This is our morning show. Serge Berger here from the Steady Trader. We're gonna fly through this morning. It's what do we see? What do we got? One, two. Yeah, so four things that we're looking at closely here today, and are willing to share with everyone. Hope you guys are going to enjoy this. As always, if you haven't subscribed to our channel yet, please do so. Just it allows you to be updated in real time when we do these pop-up sessions and move when any other content that we create comes live. So please do that and hit the subscribe button and the like button, or whatever. Okay, so top few things. First of all, I want to talk about the dollar. We have to understand why the dollar is rallying and maybe how far it could go. That's number one. Number two, I do want to look at healthcare stocks. So we've now had a few days of just kind of go by since the election, and there are starting to be some trades that are becoming more obvious than others. So I want to do that. And then I have a couple of individual stocks I'd like to look at, namely Salesforce and Spotify. So let's get into it. 10 minutes, maybe a touch more. Let's go. All right, so first of all, before we do even anything, let me just remind everyone who's trying to do things here, this here right now, this is a 5-minute chart of the S&P 500. And you can see that basically since, for the most part, since Thursday, so everything pretty much after Wednesday, we are sitting in a trading range, like a pretty gnarly, tight, boring trading range, where even as a futures day trader, and I do that, I don't do more than 2 or 3 trades a day, but throughout the day where there's something like, it's hardly worth your time, hardly worth my time. Everyone's got different time frames. So I'm just waiting for this to be resolved. If you are an Inner Circle member, we'll switch on over to the chat room there shortly, but you will want to watch these 2 up gaps from below. I'm not quite sure how big a chance the up gap from Wednesday has a chance of filling. I would argue the up gap from Thursday is probably very reasonable to expect for that to fill in the coming days. It can happen very quickly. We're talking about literally, like, that would be a 1% move. That doesn't even register. So anyway, so that's that's not even number one. That was like before number one. Let's flip on over to currencies. So my discussions this morning have largely been with on the sell side. So I do these morning calls with a couple of institutional investors. It's investment banks and that kind of thing. We have our sort of think tank. And we're basically looking at the euro dollar here very closely. Now, you think about this, and this is not about putting on a trade in the euro dollar necessarily, as much as it is understanding what this could mean for other things. So first of all, why is the euro so weak? Well, the dollar is strong, right? The dollar is basically shot straight up, so that's the euro dollar going down. That's this past few days. And it's basically a direct result of essentially a Trump administration that is talking a lot about reducing deficit spending. Whether they end up doing that or not is anyone's guess. The point is that's what's now being talked about. They even created this new Doge department yesterday, which I find crafty as a name. But that's what's happening. The Europeans, on the other hand, are not doing that. And so the U.S. also has a bit of better growth. Excuse me. I'm getting better, by the way. It's just a remnants of a cough, but antibiotics are working fine. So I think the dollar here has potential to go a bit higher, meaning euro lower. How much? I like to use something called the dollar index, the DXY. And if you look the dollar index, basically this year so far, and I'll tell you why this is important overall. We've found resistance at these levels here around the 10, the 107-ish area a couple of times. And so if we're able to bust through this, and I think we can, I wouldn't be surprised if we see dollar index in, the mid 1 teens. So 113, 14, basically going back to where we were 2 years ago, right? What would that do? If that were to happen, I think you're going to continue to see a supportive bid in the equity market because, strong America, strong dollar. I think that's the general idea. So from a near-term risk-taking perspective in U.S. equities, I think that's supportive. What it also could be supportive for, which is more granular, is potentially small caps. Now, the Russell 2000 is not a very good index to track small caps because a lot of the companies in there are not very profitable, if at all. But in general, you could still see kind of a chase there. So that's number one. And so the dollar being strong is really a critical factor here that has to be taken into account. So I would encourage everyone to watch the dollar very strongly, very closely. It's again, euro down, euro dollar down means dollar up. That's what that means. That's number one. Number two, healthcare. We this morning in Inner Circle are actually putting on a new short side trade in healthcare. Why? Excuse me. Take some water. The reason is quite simple. And it's actually closely related to what we just talked about, the dollar. So we have this administration that's going to come in January 20th. And essentially what we are hearing is, like I said before, this deficit cutting. I would argue that there's probably going to be a decent amount of healthcare benefits they're going to try to carve out. Because if you look at, I think our annual budget is what, 1.7 trillion for 24. And, 2/3 of that are basically Medicare, Social Security, and of course defense spending, so military. And so you have to cut out a lot of money out of that one remaining third. So you kind of have to go into stuff that's kind of non-touchable somehow, some way. And so I think healthcare as an industry could see a bit of a pullback. And in fact, if you look at healthcare, I know this is the technicals here. I'll put some nice lines on it as well, so you guys can see that more in a minute. But healthcare is basically flat now since the post-election rally. So I haven't looked at all the sectors, but this one's now flat as opposed to up like probably all of the other ones are, or at least most of the other ones. And so it leaves a bit of a vacuum here on the chart. So now if you want to just go purely technical and draw lines, then you can come up with a lot of lines. You can look at this one here, for example, that used to be resistance. Then it became support, but now it looks like it wants to kind of, be broken again. And maybe the XLV goes down into 140s. If you prefer to trade an individual stock on that, of course, just know the top two holdings are United Health and I also get the top one. Anyway. So I think this is an interesting idea to watch. And again, hopefully you can kind of follow the logic of kind of how we're trying to parse through the new set of administration. And again, it's really a game of chess at this point. The last thing, three things, is some of these software stocks are getting extremely overbought. I look at something like Salesforce CRM, and I look at it in some of our own tools, and I think this is an extremely stretched market. So I would be careful chasing these names. We are. And, there's also an ETF that tracks this. Like, for example, and you can probably bundle all of tech into this, but the IGV ETF, I think CRM is the largest holding. And then another thing, and then we'll take a look at a couple of questions, is Spotify. Spotify, yesterday I talked about this chart going from steep to vertical. Yeah, we talked about it yesterday. And the stock yesterday closed up another 11% on the day. So I think this is one of those ideas, just to reiterate from what I said yesterday, where one could put on a trade, not necessarily short the stock, but to make the bet that it's not going to go a heck of a lot higher over the next couple of weeks. An options bear call spread is the kind of thing that we would do. Now we'll go to a question here. It looks like Mason has a question on silver. I'm not quite sure what the question is. There's just silver question mark. If you guys are going to ask questions, can you be a little bit more deep? Like, what do you want to know? That would help. Like, just a ticker and a question mark is not very helpful. But I'm going to try to do my best and at least walk through silver. So for the silver and gold, the story hasn't changed. All we're seeing is normal volatility movements in these things. Part of what's happening, though, in commodities, including precious metals, is a pullback in the metal because of what I just said before, the big rally in the dollar, right? So if I were to overlay the dollar index here, okay, and you look at it this way, you can see that the dollar index is going exactly the opposite direction, right? And so at some point, that's going to start pressuring the asset that's priced in the dollar. So, right, so if you have a currency or a stock that's, or in this case it's a commodity that's priced in a certain currency, i.e. dollars, and the currency makes a big move, in this case, like big enough move, in this case to the upside, then the price of silver, all else being equal, has to go down so that it remains the same value for someone who were to buy that. Right? If a foreign investor were to buy silver in dollars, and all of a sudden he has to pay more for silver just because the dollar went up, that's not fair. Right? So the price of silver has to come down, unless there was news in silver, and there wasn't really. So does that make sense? I know a lot of people don't think about that stuff, but that's why we do our Set the Market morning show here, 10, 15 minutes. So that's all I got here. If you guys have any questions, I'm happy to stick around another minute. And then again, we do this morning show Monday through Thursday. Today being Thursday is the last show for the week. We'll be coming back on Monday. So please make sure you subscribe and you follow. That way you get the alerts in real time when we go live. You can ask live questions. And of course, you're alerted when we have new content like podcast interviews with fund managers and so on and so forth. If there's no further questions, we'll leave it here. Have a great rest of your week. And Inner Circle members, we will see you over in the chat room. We'll see if there's a gap trade to do. Take care. Oh, and again, please give the thumbs up, like, and of course, subscribe to the channel.